What is going on, guys? Good evening. It's your favorite mortgage lender of Del Guapmi, Got Mortgages. Happy Monday. Man, it is so good to be back. We stepped away for a little bit with the family. We're actually able to enjoy some time away. But it is starting to get super busy. The market is starting to warm up. I'm getting a lot of glimpses of pretty much COVID and pre-COVID days from just a lot of different activity happening in the market. We're seeing interest rates start to drop. We're seeing more homes start to come on the market. We're seeing a lot more opportunity for consumers to start taking advantage of lower interest rates. A lot of consumers start to take advantage of more opportunities. We're still, depending on the local market, seeing a little bit more sellers' concessions start to come around. So a lot of different things for us that we're going to take a look at. And I'm going to start again, as we usually do, what happened last week, what's the expectations heading into a very pivotal week when we start getting the PCE report, personal consumption expenditure report. I'm going to start again as a recap. Fed Chair Jerome Powell, once again, at the last Jackson Hole Symposium, which was on Friday, gave the green light. We are about a 90% guarantee we will see a Federal Reserve rate cut. Existing home sales bounce back to home builder confidence is still a little tacky. I guarantee this will start to change a little bit as we start seeing interest rates stay consistent. Home starts start to go up, and hiring lags at continuing jobs claims hit 4-year. Just reading that right there before I dive into it even further, right? As the market starts to change, we've always known there's two different things that we take a look at. We take a look at what is going to be the difference when it comes to inflation and what is going to be the impact when we take a look at employment. So we know inflation slowly lagging. Later this week, we're going to get updates on the PCE report, personal consumption expenditure report. What is the Fed looking for when we take a look at that report? We know it's set to potentially jump up. I believe it was 2.9% from what I was reading earlier. They know still, even with it coming up, tariffs are slowly lagging some of the impact on that. But take a look at what the Fed chair specifically said, right? There's a shifting balance of risks, right? The Fed knows that they have been predominantly keeping rates steady for quite some time, balancing out, we know, those two mandates between inflation and employment. But we're now obviously starting to see that inflation is cooling down, and we know that the employment market has simultaneously shifted as well, right? We know based on the last report, BLS report, Bureau of Labor Statistics, showed crazy revisions. I mean, like, they only showed almost 14,000 jobs that were essentially created when they were expecting like over 140,000. These revisions are constantly getting bigger and bigger, showing even truer really cracks in the economy. So if we take a look at even more, existing home sales jumped up 2% in July, 4 million, rebounding again from June, being a little bit lower. We also know, again, home builder confidence, as always, it has been really for the last year and change, a little on the lower side, under 50. We do, although, see that housing starts have jumped up to 5.2%, 1.43 million on pace, strongest since February, obviously. Seeing those gains come to a little bit more impact, okay? And then obviously some of you guys get our weekly newsletter. If you guys don't, make sure you guys reach out to us directly. We'd be more than happy to provide that to you. But diving in even further, again, we know the Fed has maintained that delicate balance, like I said, price stability, job growth, inflation, employment. What is it going to take for the Federal Reserve to finally acknowledge that this is going to happen? I think we saw it, right? We saw the truth behind the employment numbers, not as strong as they claim it is. We know that really tariffs is, by the end of the year, tariffs is not going to be a topic of conversation, right? Since April, we really haven't seen that such a huge impact as it has, but we are seeing obviously some of the revenue from President Trump's tariffs and some of the things that they've impacted, right? We do know, as I said, inventory reached, quote unquote, a higher level of 155 million, but remember, 1.1 of those millions are actually actively under contract. So technically, only 400,000 homes are essentially readily available. We do know housing starts once again jumped up, as I mentioned, 5.2% in July to a 1.43 million unit. We do know, again, building permits dropped from 2.8% to 1.35%. Big part, again, guys, keep an eye on this. Continuing jobless claims at a 1.972, the highest since November of 2021. That is huge, right? That is showing us that if you are let go, you are still having a hard time going and finding a job. Almost 2 million people are currently collecting jobless claims and unemployment benefits till this day. We do know, again, initial jobless claims rose by 11,000. So another indication, once again, that's at a 2-month high. Another indication, obviously, on the cracks of the labor market. Like I said, later on this week, we will get July new home sales, which we just got, pending home price appreciation, pending home sales, Q2 GDP, and then the big one's going to be Friday. What is going to be the Fed's PCE report index, personal consumption expenditure report, which is their Federal Reserve's favorite measure on inflation? Is it going to continuously show the cracks that we've been seeing? As always, I will keep you guys updated as we get some of these updates, and we'll take it from there. If you guys have any questions, make sure you guys reach out, gotmortgages.com. Talk to you guys soon.